I've decided that I am not going to be trading for the rest of the week because I have been on a losing streak this week. And with that said, that's going to free up my time to make some more content and help people in my community and other communities I'm in just get more educated on certain strategies that can help them become more profitable. And if not, they're like profitable already, it'll make them profitable. And that's ultimately the goal, right? Most apt definition, to find areas where we can make money. And with that said, make money off of inconsistencies and imbalances and inefficiencies in the market, right? And that's ultimately your goal as a trader, is to find inefficiencies in the market and make peak optimal entries off of like what you see, what you're capable of analyzing. Moreover, if you can do that consistently on a daily basis, your growth curve and your open P&L curve will just be much nicer. And on top of that, you won't be doing what I'm doing, which is not full porting into one position, but utilizing 100% of my portfolio every trading day in multiple different trades. And that's kind of what's been going on this week. Like I went down the first day of, no, I went up the first day of the week. I made, right here it says I made $500 first day of the week. And then the next day I completely shit the bed and lose 430. The day after that, I lose another 298. And then the day after that, I pretty much lose double the amount I lost those previous 2 days. So I end up losing in total a grand 300. And then today I lose another 100. So a grand 400. So I'm taking a break. I'm not gonna touch real money. And like with that said, to reiterate, that's gonna give me more time to just give back and like help people out with what I know, right? So I'm on replay mode. I'm going to the beginning of the year on the 10 minute for um actually let's go a little bit further. We're just gonna go back as far as we can on Nvidia. And I'm gonna cover the strategy that's what's considered pure price action trading, meaning we're not using any indicators, we're not paying attention to any order flow, any proprietary use of for example like market data. Like we're not going to use social spikes, we're not going to use insider trading, we're not going to use UOAs, so just like options flow. We're not going to pay attention to sweeps, dark pools, golden sweeps. We're simply going to be trading off of price action, right? And if anything, that has been the wheel, and that wheel is the wheel because it works. You don't need anything. You don't need to pay for anything. You don't need to use anything else. If you can refine and grow your toolbox with like newer information that your brain attaches and to its like to that information a certain level of importance, and then you're consistent with it, you'll see growth. You'll just see overall growth. So that's going to be like the 4 minute mark already. So I'm just going to get right into it. And we're going to do Nvidia. And I'm going to show you how this strategy works, given that Nvidia has just been on a current, like just uptrend overall. So I'm only going to be placing like put sim trades on Nvidia on the 10-minute chart, which is what I like to use for this strategy, because it wouldn't be cool for me to try and test a strategy and then just say, oh, like I'm gonna do this call, or I'm gonna do this long on Nvidia, when we all know that Nvidia runs just in general. So all I'm gonna be doing here is showing how I'm gonna be profiting off of the top performing company just from shorting it on a 10-minute time frame, right? So here we go. So this is like an example, right? So you're looking at a sweep to the high, and then a retracement, sweep to the higher high, and then a retracement to a higher low, and then sweep to a lower high, and then sweep lower back, right? So in all this movement, there are people who are getting in long, and then say people get out as soon as they see that retracement and this pullback up here. So next thing you know, that's liquidity exited from people take profiting, right? And at the same time, you're getting put entries, which is going to increase. And then people are also getting out, right? So that's like just supply and demand. Like there's a sweep to the high here. There's going to be a take profit. That's going to be liquidity out, right? There'll be liquidity out. Let's make this look like an L. That'll be liquidity out because people are selling with their take profit. And at this top, there's going to be a slight retracement. And this sweep is going to cause a lot of people to sell more, especially in a bear market. If you're in a bear market, there's going to be an overselling simply because fear is going to be like already a bigger play. And I'm just going to highlight this zone right here before I continue on what I'm saying. So there's going to be a take profit up here. As it retraces, more people are going to get out, pushing price to go even lower. Because say like there was a small sell-off, it could have just continued to go up here. But say you're in a bear market, that sell-off is going to be larger, right? And then say right here, say people who try to get in right here, and they saw this and they decided to hold, they're also going to be getting out. And then people who are looking at this and saying, oh, this would be a good discount, I'm going to be like, there'd be stop losses. And then there's going to be buy limit orders here. And then there's also going to be take profits, right? So that's a stop loss, that's a buy limit, and there's going to be take profits. And that's going to be inside this zone right here that I've circled. At this level, say, this is all example, right? It pumps up again. So people who didn't take profit here and people who held here, they're going to be banking off of it running over here as well, making a higher high. So you can assume once it makes a higher high, there's going to be a larger buy imbalance, signaling another swing to the low. That swing to the low is going to have the same thing as this right here. It's going to have stop losses, buy limits, and take profits. Ultimately meaning it's going to be a nice zone of liquidity people are paying attention to, right? And then usually it's going to pump a little bit back up, make a lower high, and then sweep to a lower low. And this is ultimately where most people get swept out when it's swinging like this. And this is a head and shoulders overall, just a simple pattern, for example. And all you need to know is when you see stuff like this happening, so sweep to the high, sweep to the low, sweep to a higher high, sweep to a higher low, a sweep to a lower high, and then sweep to a lower low, sweep to a lower high. You can see like how like I can draw like a channel right here. Now there's price is channeling to a newer. I don't know why it's doing that. I'm using the wrong channel. My bad. You can see from this higher high, price has created a new trend, and it's channeling lower. And this would be optimal entry, but I put my zone of entry here because it's realistic, right? I can hold in the red a little bit if I'm like going short, right? And then like I'll ultimately be taking profit over here. If anything, better zone of entry wouldn't be at the lows. That would be stupid. It would be right in between the highs and the lows. So if I draw like a box, and hopefully I'm not too slow. Where's my box? This would probably be optimal zone of entry here. Because if I get in short right here, I'm holding red for just a tad bit. And then like right here, I could take profit, and best would be to take profit out here. I'm putting in the middle just to give an aggregate on a realistic expectation. You're never going to time these highs perfectly. unless you know like arbitrary Fibonacci levels like the right way, right? Right? Something like that. Or like something like that. Or then like like something like right here, right? But no, we're not even going to be using that. This is pure price action. I've seen a trader go over this setup, and like this setup is also the same for the inverse of that. Sweep to the low, sweep to a lower high, and then you got another sweep to a lower low, and then you got sweep to a lower high, sweep to a lower low, and then that plays out as trend channels back upward. And this is for going long. And I'd say the best zone of entry would be around here. Right? So with that said, I'm going to remove all of that. And we're going to be doing it in these sim trades here. And I like to just simply call this just optimal zone of entry, purely off price action. Right? Nothing else besides that needs to be said. Right? Have this gap up. We're on the 10-minute. I like to jump to time frames when I look at all this, right? So I go on the 15-minute. You can look at what that looks like. Pretty much the same. On the day. On the day, we got a bullish SMT forming, right? Swept to the high, retraced lower the past 4 days, and then it's bottoming out just a little bit here, just with current data. Excuse me. 4-minute, same thing. 4 hour, I mean. But you can kind of see from the previous, from Tuesday all the way to the next Tuesday of the next week, you can see like this bullish SMT forming, right? And but overall, see, that's what's beautiful about time frames is like you'll have a bearish SMT on the day, a bullish one forming on the 4 hour. What about the 1 hour? Let's see what you got. So the confluence off my trades are usually off of what I see on these separate time frames. So the 1 hour, same thing. You got to sweep to the high, sweep low, sweep to that higher high, and you sweep all the way down, channeling downward. And doesn't that kind of look what I'm talking about? Burp, 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 burp. So that's kind of what I'm looking for, right? So with that hour, we'll now go to the minute. So confluence is we got some bearish on the day, bullish on the hourlies. So I'll let it run for a sec and see how well that confluence holds up. And I'm looking just for a setup. See, yeah, so that bullish on the hourlies is playing out. And this is perfect now. So I'm looking for these sweeps to the high. First retracement. So we're going to see my setup pretty much draw out over here. And just sweep higher. So what I like, this is perfect for the setup. This is perfect. Right here. Come on, I want to see a high play out. So you can already assume this breakout here is going to be tested again. And then if I go to a 5-minute, it's going to look more like the setup. I don't got data points. Okay. But overall, if I draw this out for you, like really, it's everything I explained. Sweep to the high, sweep to the low, sweep to the high, sweep lower, sweep, and now it's just trickling now, failing to make a higher high. So if anything, just from eyeballing, and that's really all this is. Where is my stuff? I'd say a good zone of entry, just short, would be right here. I'm waiting for it to break past it or sit a little bit higher than the midpoint of it before I enter short again. Or it could ultimately just channel here and break out again, and then we can find another setup for it. So see, I could enter short already there, but Patience is key here. So it breaks past it. This could be a breakout. Yeah, it's a breakout. Okay. There you go. Slips back in the zone. Let's sell one. There you go. Holding red for $1. First two candles. It's breaking upward. Seems like it could be breaking out. But for all intents and purposes, we're going to trust our confluence here. Right? So you see how that worked out? Just take profit, $25. I made $4, 25%.